Hello and welcome to Pro Trader Strategies Market Commentary for Monday, July the 16th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. It's a Monday. We usually don't get economic data, but we actually might be getting some of the best economic data we get this week for the most part. So let's talk about it here. In the United States, we got core retail sales, which strips out like autos and things of that nature. Came in at 0.4%, expected to be 0.4%. And then retail sales came in at 0.5%, expected to be 0.4%, so slightly better than expected there. And they revised last month's number up from 0.8% to 1.3%, so much better than expected there. And also, on core retail sales, they revised last month's number up from 0.9% to 1.4%. So headline numbers, pretty good, beat on the revision. So that's really what's making that number look good. And it may take a little while for the overall market to kind of dig in that far. They're just going to generally look at that headline number until later on. So hopefully they'll see that. We might get a little bit of a move to the upside with equities. Not looking too great right now. Also, Empire State Manufacturing came in at 22.6, expected to be 20.3, so that's also another good number. Business inventories in line with expectations at 4.4%. All right, so pretty decent economic data. We still have crude oil even after that build. We might have to wait another couple of days before we start seeing crude oil inventories or anything of that nature. We don't really get crude oil inventories this week, so we might have to wait off, but this is a little wanky that this is selling off of that last build we saw, just a massive sell-off. So back into the 60s, which is good for the consumer as far as I'm concerned. I'm just very surprised with that last number that we got, that oil has really fallen out of bed with a big draw. But having said that, the market can act irrational longer than some people can stay solvent. So this is one of those situations where there's probably a lot of people scratching their heads right now. Crude oil falling off though. Gold also still losing its luster since Putin stopped buying. Putin was buying up in here, and now we have seen, almost a 130-point sell-off. So gold just not holding up after Putin's done buying. Bonds coming off a little bit. We talked about this. They just don't have any room to the upside with bonds. Almost down a point today. That's good for my butterfly and my long puts that I have on in TLT, so that's good. Just, I've been waiting for this rollover to happen. I think it's going to start wanting to come back down to the point of control again. VIX, it's slightly higher, but, it's unchanged for all intents and purposes. We've got the Dow Jones Industrial Average unchanged as well. Let's go on and look at the NASDAQ. NASDAQ getting this little bit of a toppy pattern going on here. Not quite confirmed as of right now, but it's not looking too good. Anytime you see these continuation patterns, you got to be really weary of that. And it's kind of setting up like that right here again. So I wouldn't be surprised if we're going to need to wait for real confirmation to the downside before we do anything in that. E-mini S&Ps has a similar look. We have these counter-opposing dojis. I'd hate to see something similar like that happen right here if you're bearish. So stay mindful of that. It's still right there at that 2,800 psychological level. I've been talking about this. Normally it would act as a support and resistance, which I think it still will on the Fibonacci, but I think it's lining up closer to that 2,800 where we're going to be kind of pinging back and forth on that as the bulls and the bears fight over that psychological level. All right. E-mini S&Ps, really no overnight inventory. It was pretty flat for the most part. Did get flushed out if there was any longs in there, and we're just kind of quietly trading sideways for the most part. Pretty dead day for the decent economic data that we got. All right, so it is earnings season. We've seen some of the bank stocks already come out. Actually, a lot of the bank stocks, a few of those bank stocks beat on earnings and really got crushed on it. So I'm going to be playing, Goldman Sachs we'll talk about, but Netflix is also kicking off the start of this earnings season. So I'm going to be looking at Netflix, most likely playing it to the upside. They have been crushing it. Even I think they had the most nominations of any station or any conglomerate. It's been held by HBO for the longest time. Netflix finally took over that position. I think Netflix is going to be a good play to the upside for that earnings. Johnson & Johnson. I might be throwing a condor or a strangle around this one because I really don't have a market directionality assumption on this one, and it has a tendency to pretty much stay tight other than this earnings here. But for the most part, I think that a strangle or a iron condor around this trade is what I'm going to be looking for because I don't have a market assumption on it. It's a staple. I think they'll always do well, but whether or not the market really wants to take heed to their earnings is another question. And then Goldman Sachs, I talked about this. The banks got beat up on their earnings before Goldman Sachs came out. You can see they kind of have started rebounding a little bit here. I think that oversold area is done. I think it was more of a sector rotation. We're seeing a lot of that go on right now, where it's a little bit bizarre as to how some things are trading, especially with these bank stocks beating on earnings and then getting pummeled afterwards. I think Goldman Sachs is down the road far enough to where that's kind of out of the way, so I'm going to be playing Goldman Sachs to the upside. All right, so all of this being said, I haven't added anything to my portfolio. I'm trying to save all of my margin for these earnings trades, so stay tuned to this. I'm going to be talking about all these earnings trades for the next couple of weeks for the most part, and maybe adding very little to my overall portfolio for the longer duration. All right, so that's about it. Other than this Thursday, we're going to be doing the ratio call spread. I'm going to be talking about how to set that up to increase your probabilities of success. Yes, you can go online and figure it out, how to do a ratio called spread, but they aren't going to give you all of these different little nuances that you need to follow in order to be successful with this trade. So go to protraderstrategies.com and sign up for that. That's all I got. If you can't take that, take it easy.